Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything that you need to start your trading day.
Good morning, everybody. Welcome to this Thursday edition of Benzinga's Pre-Market Prep. Spencer Israel here with our two hosts, Joel Elconin and Dennis Dick. On the show today, we've got a lot of earnings to discuss, a lot of ratings to discuss, some biotech news to discuss, but the big story seems to be what happened, what's hitting Apple starting last night. A report from Bloomberg is hitting the stock, and we'll talk about that and how it relates to the broader market on this, the 30th anniversary of of the crash of '87, I should say. Joel, how's the market doing?
Oh, absolutely terrible. I got to reboot my computer because it's showing the spoos down 11.5. We're off the pre-market low. Pre-market low is 42.50. That coincides with your October 10th low, so that'd be a nice target on the downside. Coming on the upside, we got a 50% retracement, that quick bounce. If you were up at 6 a.m., you could have caught it at 51.75. So that's an intermediate number on the upside. Crude just bouncing between 50 and 53. Couldn't quite get to 53 yesterday. Back down in the 50 handle. Let's take a look at the daily charts, and you can see the support just above 50. Gold and silver in the green, little flight to quality here. Gold up 5.10 at 12.8820, and silver back over $17 by 4.5 cents to 17.04.5. But Spencer, I don't know if Dennis is going to come on the show today because he's out there lifting every offer that he sees, and he's not hedging with spiders because it's ridiculous. Dennis,
he just BTFD.
Yeah, Dennis. I mean,
strategy.
Has Bob called you yet and telling you to quit buying? Because I know
I'm buying just too much. I'm buying too much stocks. It's the first pullback we've had in a month or, even more than that. I feel like, the first significant pullback. And this is funny. This is to be normal trading. And now this is a significant pullback. But here you go. The VIX exploding here this morning. It's up 14%, trading 1148, close to 1007. So Nervous Nelly's here on the anniversary, the 30th anniversary of the Black Monday. We decided to have a little crash of our own.
It's unbelievable here. A couple different factors going into this. We'll go to the stock-specific news. Spencer, give us a little bit of macro news going on over there in Spain.
Yeah, Spain's in some stuff. So the latest development is that they're going to trigger what's known as Article 155 on Saturday, which essentially revokes the independence and the governing from the Catalan government, essentially. So that's what hit Spain stocks and bonds yesterday. If you don't understand what's really going on here, I'll put it in terms the way it was explained to me by my Spanish roommate, who basically said, imagine if one day Texas decided to leave America and then the president sent in the army. That's what's going on there. So that's what hit Spain yesterday.
And that's what's hitting our markets here too. Like, we had a significant fall. It started a little bit with Apple last night. We'll get to that in a second, but we had the significant fall, right around 4 o'clock, Joel?
We had a couple.
Futures?
Yeah, let me go to the 15-minute chart here, and you could see that we were just hanging out at yesterday's low, and then on that 4 o'clock open is when you had the flush down to 42.50. You're already trading in the red by 3-4 handles, but on that 4 o'clock open, that's when you got the big push in the S&P futures.
Okay, so we're on the 30th anniversary. We're going to talk the crash. We'll talk some mechanics. We'll talk to some people who were there on the floor, including Joel Elconin himself. So he'll give you a little bit of his stories from the Black Monday there 30 years ago. But let's just get to the stocks. In the next few minutes, we'll get to the stocks that are moving here this morning. Stock that was moving down last night, right around 7:13 last night. Apple, there was a report coming out of China, the Economic Daily, Spencer, Taipei-based Economic Daily, and they were reporting that iPhone 8 sales weren't good.
I think it actually might be coming from Taiwan, but basically
Was Taiwan? Okay.
I think so. And they basically said that this report from a trade there said that iPhone 8 shipments are basically being cut in half.
And on that news, Apple last night, so at 7:13, we closed 8 o'clock. Apple actually fell over the course of the last 45 minutes last night of trading down $2. So, and the S&P futures are starting to drag a little bit at that time. So then we close, the equities close at 8 o'clock. But Apple, so you see Apple down $2.50 this morning. It actually isn't market related. It was already down itself last night on that report that the sales of the iPhone 8 had been slashed by around 50% for November and December. What's interesting here, and I don't know if the market, wouldn't this be expected? I mean, they came out with 3 iPhones at the exact same time. They came out with iPhone 7, iPhone 8, and iPhone X. So obviously one of them's not going to sell well. I mean, you don't even know which one to buy. I don't know why you'd buy the iPhone 8, because first, you just go buy the iPhone 7 or you could buy the X. So they kind of, killed themselves when they came out with 3 phones at the same time.
The report studied unspecified supply chain problems. So like you said, that has 3 phones, 3 different supply chains. It can get confusing, or it's hard to manage all that. So if sales for one of them were weak, which is apparently what we're seeing now, is sales for the iPhone 8 aren't as strong as anticipated. That's throwing a wrench into the whole thing. But
confusing for the consumer too. I mean, we said it, and Apple actually got hit on that day that they came out with the 3 separate iPhones. So they're getting hit here again this morning because the sales of the 8 don't look as good. I don't know if the sales of the 7 and the X are performing okay, though. I think it's just maybe choice over there. So I'm not that concerned about this headline here for Apple. Apple trading down $2.50, still own Apple in my investment portfolio, but it is down on the headline. It was down last night on that headline. And the suppliers were getting hit on that headline last night as well. Now, it's kind of quiet here this morning because a lot of these haven't traded this morning. But if you look last night trading, you had Broadcom trading down last night, AVGO. You had Cirrus Logic, CRUS, another supplier. It's trading down here in the pre-market. It's down 1.5%. You had Skyworks, SWKS. That was offered down and trading down last night and trading down at 106 here this morning. Another one, QRVO. That's offered down here in the pre-market. Finisar is another one too. It hasn't made a trade, but there's quite a few of those suppliers. The direct ones you think, Cirrus Logic, SWKS, AVGO, those are all getting hit.
All right, first let's go to the big daddy, and that's the one that's going to be moving things, and that's Apple trading down $2.36 and 157.40. Pre-market low right now in Apple is 156.85. Now, if you guys had been listening to what I've been saying over the last couple of days, 157 has been the 50% retracement of this whole break. And I told myself, if it comes back into 157, I'm going to take a good look at it here. So there you had the breakdown from 64.94 to 49.10. You finally cleared 57, got over 60, nice round number. I don't know. Well, let's see what happens if, in fact, we get down to that pre-market low of 156.85. Your 4-day low is 156.41. So I think you're going to find support here in Apple coming back on the upside here. You got a ways to go to fill the gap from yesterday all the way up at 149.60.
Let's jump over here into other stocks that are moving this morning. We got a couple earnings plays that were wild. And you know what? This theme continues here where stocks reporting okay quarters are getting hit. So, there's another tell in this market. When the stocks are not going up on good reports, it's concerning overall. And you had a lot of stocks even reporting last night that were okay quarters, and they actually got an initial lift on it and then turned around and slammed it. Check out American Express, AXP, last night. Well, you know what? This is a better example. We're going to get to American Express in a second. But URI, here's one that is trading in the green here. But this was a pretty darn good report. This thing popped $10 on the initial report and then gave it all back. Now it is up $3. Give us a United Rentals number, Spencer.
Q3 adjusted EPS of $3.25 versus a $2.98 estimate. Sales of $1.766 billion versus $1.71 billion. So a good EPS, a good sales number. They're also raising their gross capex plan by $200 million. So good guidance and great report, great numbers on the Q3.
And stock got the big pop, but again, it had run into the report, and it's just going to show you, even when you blow it away, sometimes you don't get much of a rally just because it was up so much. It's concerning that the stock, where did it get to last night, Joel?
Yeah, well, I have on two different platforms. On one platform, I have 156, and then as you can see here on Thinkorswim, I see 155.08. So I'm gonna go with the 155.08, and you know what, Dennis? Some significant volume traded on that bar, over 50,000 shares. So I think you got some people really stuck in this thing up there, but you've come back. You found some nice support here at 147. So I say, hey, you hold 147. I think you're good to go north. This is above the all-time high. The former all-time high is 146.67. So I like it. I like it there. 146.67, 147 even, and then just pick your number of the upside if it starts to go north.
Another stock that reported was American Express, and it got the pop, and then it got the drop there too. AXP numbers, Spencer.
Q3 EPS $1.50 versus $1.48. Sales of 8.4 versus 8.29 billion dollars. They are also raising their fiscal year EPS outlook as well. So
beat, and raise outlook. Usually that equals stock up, but stock again had run up. In the last month, it went from 84 to 92. Pretty big run up for American Express in the numbers. Not good enough here again, Joel. Where did we get up to last night? Because I was actually trying to short this one on the pop, but it was really fast.
94.50 is where you
That
get.
Can't be right. Really?
Yeah.
I never saw 94.50. That had to be a really quick one. That was quicker than my eyes then.
Wow.
Maybe that was the news algo.
Wow. And
94.50 for real?
I got it right out here.
How's that news algo still in business? Man, it buys bad sometimes.
And you know what? Over 500,000 shares traded on that 15.
Wow, I did not see that. And there was a lot of news coming. I did not see the 94.50. I was trying to short in the 93 handle. I couldn't get that. Once it started going down, it just started hitting bids. And I guess you know what you say when stock's going down, Joel, they're not lifting offers.
Exactly. I like
it starts going down.
Yeah, not much. Here's a concerning thing is that you just hit 90. You just traded 90.30, 90.10. That is your October 2nd low. So I think you really got to hold 90 on this thing, or you could see some more continued downside. And the reason I'm not really going to stick my head out and say, oh, hold 90, this is a bull market and it's going to hold it, go right back up, is because got some egg in my face from IBM yesterday. We thought we saw some weekly resistance here at 155, 156, and it chewed through that like a hot knife through butter here at IBM. Did trade up to 161.23. But 90 is a big number for AXP to hold, or you see some continued downside. In order to fill the gap from yesterday, you don't have that far to go, 91.68.
eBay reported also. We're not going to be able to get to all the stocks. There's just too many of them. So I want to have 2 or 3 more, and then we're going to have to move on. So if you have a specific stock you want to talk about, let me know now. I am going to talk eBay, though. It got the pop last night, and it got the subsequent drop as well. eBay numbers, Spencer.
eBay Q3 adjusted EPS 48 cents is in line with the estimate. Sales of 2.4 versus $2.37 billion. Again, raising the sales outlook for the fiscal year. So,
and not good enough here, though, because the stock got the pop and then a big time drop here. And we're down 6% on eBay here now. This is giving back almost its entire September run. So this is a big pullback here. I would love this to get back down to 34. That's $1.50 lower. I don't think you're going to see that there today, but there's major support down there. Joel, talk about the after hours action.
Pop up to 39.30. It dropped down to 34.97. Just hanging out at the 35.5 area. Let me see if I can find a daily low here. I got a daily. They're a little bit above this. Let's see if we have anything at 35. 35.10. That is your low on August 30th. I look for that to be support. If we can't hold that, we're looking at 34.42. But we're a minute late for a guest, and we have a good guest here on the 30th anniversary of Black Monday, and we're going to bring on Greg Bruno. And Greg was on the floor. He traded that, and he's going to tell us what his experience was. And there was some good trading action a couple days after. So quick break, and we'll be right back with Greg. While we're hunting down Greg here, we will go to some more earnings reports here. We just
Verizon.
All right, let's talk Verizon here, Dennis.
Spencer, do you have the numbers in front of you there for Verizon? I know you're hunting down our guest.
I always have our numbers in front of me. Q2 EPS 98 cents is in line with the estimate for Verizon sales of 31.71 billion versus 31.45, so a slight beat there on the sales number, and they met the EPS estimate. They see their fiscal year 17 sales to be fairly consistent with 2016, with an improvement in wireless service revenue. And they see their fiscal year adjusted EPS to be similar to their consolidated revenue trends.
I mean, this does not fit the description of a stock that's run up into the report. So really, when you look at it, and AT&T is actually well below there from where it was a couple months ago. Verizon's kind of where it was, in the last couple months. It's kind of been meandering. 50 has been major resistance, though. So that is the number there. But it kind of feels a little bit more like IBM than it does some of these other ones here, where I think you could actually see some follow through in this. We're also down, Verizon trades like a bond. TLT here is trading up in the pre-market a little bit here. So I think, Verizon could actually hold on to these gains. So, and despite, every other stock giving it back, I think Verizon could hold on.
Give me a number for a close as far as holding these.
Where I think Verizon is going to close?
Yeah.
I think it could open at 50.
Okay.
I don't know if it, I think, $50 is a resistance for it. It's got to get through there. That's such a resistive level that I don't know. I want to see what it does at 50. I think it's going to test it. Is if it fails there, if it opens at 50 in the open and then just tanks, then there's so much more information that comes from that opening. You see where it opens. Maybe it opens 49.85, takes out 50 and keeps running. Then, you think, okay, well, this could be on breakout mode then. But if, that holds, and it's not just $50, you have high 50.31, 50.08. I mean, there's multiple highs in that 50 area. So resistance is resistance until it's broken. So I'm not coming here buying it either, but I'm scared to short it. That's what I'll say. Scared to short it.
Okay. How about it closes below 49.85?
No, I'm not going to bet here because I don't have a feel for this.
Okay.
I'm just saying I don't want to make it. It's up a lot here. I'm not buying it up here, but it is right at resistance because it's at resistance. But I just have the feeling, where IBM yesterday, we were thinking, oh, it's going to stall out at 155, 156. It blew through there like a hot knife through butter. Could IBM blow through, or could Verizon blow through its 50 resistance? I think it possibly could. So that's why I'm just hands off on this right now, because resistance until it's broken, and 50 is big.
All right. And your pre-market highs right there, 49.94. Big move for Verizon. Once again, you need a lot of stock to move it like this during the regular session here. But there it is. You can see the highs right at 50. High of the move is 50.31. A couple other pesky highs over 50. So we'll see what happens here. I just say just a big resistance here, kind of a negative market. I know the TLT's up, but good. I guess a better place to exit along if you had it than try and execute a short.
Jumping over here to Winnebago WGO, they also reported last night, and the stock is trading higher. And this is a stock that has been a monster mover. Everybody loves Winnebago with these lower gas prices. WGO, Spencer.
I feel like they beat every single quarter. Q4 EPS 79 cents versus 70-cent estimate. Sales of $454 versus $441 million. So a beat and a beat. Also $70 million buyback. And I'm going to go back to their calendar because I think they beat every single quarter. Let's go back here. Well, just for the last few, mostly.
It's a breakout here, Joel, on light volume, though, and it is leaking a bit. So that is concerning because this thing was up a lot higher here. What was the high pre-market?
Pre-market high, 46.65. There's a good number there, up to 46.85. That's your all-time high. So you have pulled back just a little bit. I think you run into some problems here, even before that in the 46 handle.
Adobe gave some guidance last night, and it was good. And Adobe is up substantially here this morning. So if you're coming in and you're along Adobe, you're along the one stock that is up significantly, the one tech stock that is up significantly. It's up 12 points here now, ADBE. The guidance, Spencer.
I don't even think did they raise it that much? Let's see. The fiscal year 18 sales, 8.7 billion. The estimate was 8.68, so barely. The fiscal year 18 adjusted EPS at $5.50 versus a $5.21 estimate. So that's a bit of an increase there. They also reaffirmed their Q4 sales outlook.
Up $12. I mean, you can't fight this tape on this one. This thing didn't give anything back. It was trading up there last night. Market pulls back. Adobe said, nope, we're not pulling back. This is a big move. It's all-time highs here for Adobe on a full-on breakout.
Yeah, 167.40. That was the pop that you got to after a monster move and after hours trading. Coming back, hanging out at 165. You have some pre-market support at 163. So under 163, you got some downside. Nothing up there until 167.40. That's your pre-market and all-time high by a large margin here. No, it's not. Oh, yeah, it is. Previous all-time high, 157.89. Doubt we're going to see that today.
Philip Morris getting the beats here this morning. It reported last night, and I think it's not good.
Oh, really? What makes you say that? Q3 EPS $1.27 versus $1.38. Sales of $7.47 versus $7.72 billion. So a miss on the sales and a miss on the EPS. They see their fiscal year EPS coming in lower than the estimate. $4.84 was the estimate. $4.75 to $4.80 is what they actually see.
Getting the beats. We're taking out a major support level of 110 here too, which is the concern because this stock ran from 90 to 110 in about 2 months period back in early 2017. Now we take out that neckline there, and if we close below, and I'll give you the number, I'll just say around 109. If we start getting through the 109, it opens up. Now that being said, this is a defensive stock. And market likes defensive stocks on days that we're down. If we start to actually get into a market that's starting to pull back, and I don't know if we're going to pull back significantly here or not, the jury's still out on that. This is a stock that actually can turn to be in favor. So 107.30, though, it's down $5. Wow. A big fall for PM. Joel, what do you think?
Oh, boy. I mean, that's just taking out absolutely everything that you have here. That 110, that was your support. And, man, that's been support throughout the entire year. I do see 108.68 and the 108.60 level. I don't know. I mean, there was a double monthly bottom there. We're $1 below that. Below that, I mean, I have February's low at 95.20. So this is one of them. I would just keep an eye on that, whatever the pre-market low is in the open. And if it tries to rally, go with it. You have some short cover. But if it continues with the downside, I could see this one, maybe flushing out off the open. You have some sell stops. You take it down another, $2 or $3, and then just out of nowhere turn around. But this is taking out all conceivable support here. And on the monthly charts, I have nothing down to 95.20.
Okay, it's 825. Let's start talking this up market. And if there's another stock you want to talk about, let us know here. Just want to talk a little bit about the crash because we are on the 30th anniversary there. And just to highlight, how significant this was. Michael Harris actually wrote an article on this on his account. He's a good follow there on Twitter. I'll just go grab his. It's Mike Harris New York is his Twitter acronym, and he's a great follow. He wrote, and just a little write-up on it, this was a 25 sigma event. 25 sigma. Like, think about Fari Hamsi. Is Fari still coming on today?
I believe so, yes.
Yeah. Okay. So we'll have to ask Fari about that too. Like, Fari always says when something gets a 3 to 4 sigma there, it's bound to reverse. 25 sigma event was the crash of 1987. So this hit everyone by, big time surprise there. Had started leaking on the Friday and just followed through. And then there was just no buyers. And the markets obviously, it's crashed. The biggest down day in history there when we fell that much. And Joel, you were there.
Well, actually, I was upstairs. They had pulled traders off the floor that did not have enough money in their account. I can't remember what the minimum was, but it was just I remember being upstairs and a couple of the guys that were trying to trade off the phones. I remember one guy picked up he's like, I just got to get in on this. And he picked up the info. He goes, sell one at the market. And man, they just hung up the phone on him. He was waiting for a fill. Didn't get, one lot, they could absolutely care less about that. And then he never got a fill on his sell. And then 10 minutes later, he picked up and goes, buy one at the market. And I can't remember what the overall outcome of it was, but
doesn't sound good.
No. I mean, he had a market order. I mean, the thing about that is that, and I hope we can find Greg before the end of the show. There were other events that were leading up to that. And I mentioned it the other day. The VIX had actually started to heat up for a long time. So is this going to be the same kind of event? No, I think what you got to have is, get a little recovery and then have really 2 or 3 bouts of this high VIX and volatility get people on the edge. I don't think one time, this spike, especially the way people have been conditioned in this market, is going to get, this kind of reaction. The other thing, the VIX trade is similar to the portfolio insurance that people had back then. That, all you need to do was buy stocks and, hedge by shorting the S&P futures, right? So that was the strategy. But, so when you get these VIX trades unwinding, they're selling the S&Ps. They're selling out the long S&Ps. And so that's what, kind of created the extra volatility. So it's the portfolio insurance that people thought they had. And then, I think there were some things going on in Germany. I saw a thing. There were some things going on in Congress with Dan Rosentowski. He was trying to stop all mergers. That was another thing. I saw an article that someone blamed on that. So it was things going on in the United States. There was things going on with Germany, and it was just kind of similar now. This no-lose strategy that, you can, hedge your portfolio, by buying all kinds of stocks and hedge it, with the VIX trade. Back then it was portfolio insurance, and that was selling the S&P futures. The problem is when they finally went to sell the futures into that kind of market, there weren't really very many buyers. Yep.
There's not a market. Just a great tweet from Lawrence McDonald. We've had him on the show before. They convert bond. And he tweeted this last night, and I got a kick out of it. It says, on October 19, 1987, calling the floor, me, I need to sell so many shares of IBM. Trader says on the floor, it's 98 bid. Me, I say, my machine says $119. Trader says, well, then sell it to your machine. So the quotes and, what was actually happening on the floor was moving so fast. You're in a fast market and you might not get the quotes. And just goes to show you, when you're in volatile markets, and a lot of people haven't experienced this. We haven't really had, crazy volatile markets here since really the financial crisis, which is going on 8-9 years ago here now. When you're using market orders out there, you're just using, random, that's not the thing to use in those kind of volatile markets there, because you can get some really bad prices. So, put prices on, where you want to sell out of your stocks. Now, this can happen again. We've seen some events. Obviously, we had May 6, 2010, which was the flash crash, which was a violent 5 to 10 minutes there, where obviously the Dow fell over 1,000 points. You had stocks trading down to 1 penny a share. I mean, things can get very violent very quickly. So you always have to be prepared for an event like this. But, these are very rare events. A 25 sigma event, it probably never happened before. So it's something to be aware of. And I'm always, still a fan of diversification. I think it's the best way to protect yourself. When you put all your eggs in one basket, you're going to have a crash in any individual stock at any individual time. A stock can get halted in intraday, even for you day traders out there. So, the best way to protect yourself, I still say, even in your trading portfolio, is still to diversify. Second thing is to just be aware, and don't get too heavy on margin, because if you're not on margin, you'll always be okay. But you can still lose your account, obviously. But when you're 2, 3, 4 times your equity, you can lose a lot of money in a hurry, obviously. Because and then the other thing you got to just be careful of is the naked put writing, because so many people go out there, and in this environment, naked put writing has worked very well. But if you get into an event where all of a sudden the markets, go into crash mode, which we saw in May 6, 2010, which we also saw in August of 2015, all of a sudden you could get, some margin calls very quickly on some of these naked puts that you've written. So if you don't have the cash to do it, you could be in trouble. So always never just get yourself so big that you couldn't handle an event like this.
And that's similar to what, Nick strategy employed. But, if you're not just selling the puts, but selling put spreads, you can lose, whatever you sold the spread for, whatever the differential is. But at least you're hedged in this kind of situation. So good. I mean, and then if you're going to buy puts for protection today, The problem is they're going to jack up the volatility on it. And, you could get even a continued move down. But, if they jack the volatility on you today, then, you're going to take even a bigger move for it to come into the money. So
I think in the long run, if you're always buying protection, it's really a tough sell. I mean, in the long run, those put writers are making money. So not saying anything bad about put writing, I'm just saying don't get yourself so big that you couldn't handle it. I think a lot of people like Nick. He's always writing insurance to the market. He does it the right way, but he's never going to get himself so big that, in the event that you had a market crash and the market suddenly fell 10 or 15% in a matter of minutes, he'd be okay. He's not getting himself so big that he couldn't handle it. But you have some people, and they do this. You just have random stock that you think is pretty good, like Facebook out there, and saying, well, I would always buy Facebook at 150. So they write like 10 puts at the 150. Well, that's okay to do as long as you don't mind owning $150,000 worth of Facebook. Or, some people get really crazy and they write 20 puts, because you have margin that you can use on these options. But stock starts to go down. All of a sudden, you've got to start ponying up more margin there for those puts that you've had written. And if stock crashes, you got to pony it up big time there. And sometimes there's no market there. And, when your retail broker is looking at the account, there's no market in those options. They're going to look at your account and say, we need more money, right now. And otherwise, you might have to liquidate into one of these events. And you never want that to happen, because if your broker forces you to sell out of a position in that event, and there's no market in those options, you could really get an ugly fill. So all I'm saying is don't get yourself so big that you couldn't handle an event where, when you have 3, 4, or 5 sigma event, because those events will happen. They will happen again. It's just a matter of time.
Also a characteristic of this market, and I know it's going back a long time, 30 years, but, they'll be buying something today. That was an flat out, all out, sell everything but the kitchen sink. Here, is money going to go into Verizon today, or AT&T, or some of the laggards? I mean, it's like the money is just very rare. I mean, you can't get any, money in the bank. Interest rates are, very low. So, it'll be moving around. And I think that's one thing that's buoyed this market is, just the sector rotation. And, that's what you'll see today. You see a little green on the screen right now. The big one is Verizon trading up nearly 2% when the market's down 0.5%. But another characteristic that perhaps will, I don't want to say prevent a black swan event, but a factor that we didn't have before. All right, Spencer, I know we can rely on Fari Hamsi of Hamsi Analytics. We'll talk to him where he was on that day in October of 19.
We can. We'll get Fari on in a moment. But before we go to break, I want to remind everyone or say that today's show is brought to you by Chaikin Analytics, winner of the 2017 Benzinga FinTech Award for Best Trading Idea, Platform, Tool, or App. The centerpiece of Chaikin Analytics is their Chaikin Power Gauge, a stock rating that gives you a directional edge using a proven algorithm that combines fundamental data with technical factors. To learn more, go to chaikinanalytics.com. You can also attend a webinar they're giving today at 4:15. It's the secrets to banking huge profits from earnings surprises, how appropriate considering we're in earnings season right now. So I've put the link to the webinar in the chat. We will now be right back with our guest, Fari Hamsi of Hamsi Analytics.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elkanan, along with Dennis Dick and Spencer Israel, working the boards. And we have a longtime guest on here, Fari Hamsi of Hamsi Analytics. Fari, how you doing on the 30th anniversary of the Black Monday?
First of all, it's a pleasure, honor to be back with you guys. We did weather rather okay. The hurricane, we survived, believe it or not.
I wanted to ask you, I got to get details of this because we haven't had you on the show since there. I got the call from you the day before that said you were going to ride this out down in Naples, and you rode it out.
We were lucky.
What was that like?
Did you see the movie Valkyrie?
Is that Tico?
The one that they tried to kill Hitler? The Wolf's Lair, the compound?
Yes.
We were something like that in a pine forest, except it wasn't East Prussia. It was in Naples. 5 acres of land, 12 adults, 2 infants, and 5 dogs. And the house was recent. I mean, it's a mansion actually, or a I call it compound because there were different structures on the property. Was built in about 4 years ago. Double shutters, back up to the gazoo. Had totally off the grid. Has everything it needs itself.
Wow.
The problem was we had 150, 140 mile winds going through that section. Just the way the trees are and the suction it created. And there's a Logan Boulevard next to it. This was an area called Oak Estates. And a couple of these guys who remember it well, they should write a book about that, at least a pamphlet about that event. It was crazy. I mean, Dennis, the water. Okay, I mean, I at some point, I said, I want to see the outside. They said, you're nuts. I said, no, I want to see the outside. So we got a crew together. We opened one of the emergency exit doors. I had him hold on to me, and another guy was holding on to him as I put my head out, okay? Right as the Iowa storm was coming in. You gotta experience it out there, if you will, a safe way, if there was such a thing. Because I was afraid I was going to get sucked out, okay, out in the environment.
Well,
the water,
what was it like?
Okay, the water, the rain that was coming down, it was flying. It wasn't falling. It was moving horizontally, not horizontally, it's slightly like degrading slowly, but coming down on a curve, not a straight down. Right. That's how fast the wind was. The wind was picking up the water as it was falling. And the noise, incredible. Tico ran to his bed, got under the covers, okay, and he's got like a bowl type bed. Got in there, pulled the cover, and he didn't move. We thought he's outside. We turned the compound upside down looking for him. All of us. We couldn't find him. Because, the dog sensed the air pressure change early. So he was gone before the eye hit. And about an hour later, he comes up, pulls the cover out, looks out with a smirk. I must have walked there by him 5, 6 times looking for him. I didn't think he was going to be there. I was so frustrated. But that's how it happens. The animals get it. It was interesting. The problem really wasn't what happened then. The problem, as you might have guessed, was what happens afterward. We were not ready to deal with the aftermath, because we couldn't, when we left the compound, the devastation that you see out there is incredible. And, there was no gas. This is a closed carrier state. But people would put guns over gas. In one Publix, they did over a rotisserie chicken. And because police was so short-handed, all they would do, they come in and shut down the establishment for a time being. We had a lot of gas in tanks of the pumps without power. Or somebody had put a gun and they just shut down that station who had power. It was not good. And of course, selling sector was very poor.
Is all the power back on there now? Like, is everybody's picking themselves up now there in Naples? And it's
coming back pretty fast. FEMA got in. We had power after 10 days, but we had some water issues. Water was not safe. Even we were boiling it out of abundance of safety and caution. But, you're taking a shower. So some got to my mouth. I didn't know. So I got pretty sick. And because of my psoriasis, I have a low immune system to begin with. So I had to rush to my doctor, and she changed some of my meds. And, I was good in a couple of days. But Tico was fine. We start getting vegetables within 2 weeks, on the shelves of the stores. Emergency stuff 1 week. But it was a devastation out there. In Immokalee, which is a migrant workers area, about 45 minutes east of me, right in the center of the state. because, the tallest stick, the width is about an hour and a half driving. 45 minutes from here to waist-high water.
Oh, jeez. All right.
Yeah. And Joel, that area is poor. I had an interview last year for somebody who had applied for Princeton, and I'm part of the school committee. I do interviews, and it brings tears to your eyes when you go there. It's like being south of Tijuana, okay? It is just horrible right here in the U.S. And this kid was a DACA kid. And some of them don't even have most of them don't have much papers. You think FEMA is going to help them? And we still, now there's fund drives here. Those friend of mine did one last night. Different business establishments are doing fund drives for Immokalee. It is, and that's a lot of the vegetable of East Coast comes from. But it's all devastated.
Man, Fari, well, we're glad you survived. We're glad we got you on the show today. And we just wanted, 30th anniversary of Black Monday. Were you still in high school then? You were in college?
No.
Tell us where you were on that fateful
several
day.
years out of college. I was about 9 years out of college. I remember that day. It was Monday. I'd taken the day off. I worked from home. I was in contact with my secretary. I was in transition. I had sold the company I was in. And then I had taken over a small public health company on behalf of my investors there. And it was sick. So I was going through some accounting reports, making a decision how to, salvage what we could and just, politely and slowly shut it down. As all that's happening, TV was on, and my dad calls and he says, do you know what's happening in the market? I said, yes, sir. I watch the market. I watch the screens. I see it right now. I watch not the screen. I'm watching the TV. I see it right now. But Dad, we're out. He goes, huh? We're out? I still have cash. I said, no. You're in cash. Yeah, it was a fighter pilot. He didn't know what about the market stuff. I did it for him. He goes, well, when did we get out? I said, Dad, the statement in August showed you we got most of it out. And I took a little bit out after that. He goes, okay, so I don't have to worry about anything? I said, no. He goes, okay, thanks, hangs up. Boom. That was my dad's experience with the market. Now, mind you, we had gone in at 729, silver crash. So he had a good run. It's just that, and I wasn't doing market timing. I was too busy with stuff outside. I just couldn't pay attention. He and I had a difference of opinion on one item. I said, Dad, maybe I should take a break. Market is done, good for you. Why don't we see what's going on? And starting July, we start selling. And at one point he said, like, you sold too early. Just like what my sister said a few years ago on Netflix. Netflix is at 260. I sell what she has. At 300, she tells me, hey, I don't think you know what you're doing. Maybe you think about another line of business. Okay. Now, she'd gone in at 39. You do the math. She goes in at 39. I get her at between 240 and 260, 263. At 300, she said, you should have expected that. You probably don't know what you're doing. You should think about some other line of business. Okay? That's my sister. Same blood. So when Dad says, maybe you sold early. I said, Dad, please let me do my thing. Okay? Yeah, this is July. So we took some out. We took some out in August. Almost done. There's a few items left. And, because we were not trading. I was investing for him. Hell, I had, what do you call it? I was using daily graphs. You remember daily graphs?
No, I don't.
William O'Neill.
Oh, okay. Yeah.
They physically mail you on Saturdays from William O'Neill.
Yeah. Okay.
And value line and daily graphs. So I know, I remember vividly. I'm glad we were out, but it took me a while, to be honest with you. It took me a while to get back in again after that, because what happened there was financial engineering problem, dynamic hedging. It went back. Brooks Stabber, who they gone work for Bill Caffrey at Front Point, The Big Short. Brooks Stabber was a number two. I know of him. I don't know him. I know of him. He was number two in the dynamic hedging for Morgan Stanley at the time. Almost took down Morgan Stanley. Number one was Bob Geske, which I was a student of at Princeton. Lohr, Geske, and something else was the name of the firm. They did their original dynamic hedging, and they sold that software to so many people. What they didn't realize that if everybody does dynamic hedging at a time, the drops you're going to get in the future in terms of the bids and offers is going to be so vast, you will get into this spiral. And only after the fact, they found out what was wrong with their algo. So I was his student twice, actually. I was Yeski twice. He does a very special class. And he's retired now. But back then, in the 90s, 80s and 90s, no, in the 90s, because this happened in 87. If you were in UCLA Graduate School of Management, which is their MBA program, you got your marks because you got into this class. And there was a 1-year waiting list.
Dennis mentioned an article that said that the move on the crash was 25 standard deviations, and we know you like to do your levels. Is what's the farthest that you've ever seen out on your levels as far as moves out? Going past 1987.
Well, on the VIX, we reconstructed the VIX back then. As you know, after Brady Commission, more things were put in to protect the market, including stops, and so forth, the wire trips and all that. But then they came up, then Rob Whaley, which I worked with extensively, did the VIX original algo, gave it to SIBO. Alex Jacobson, who also contributed to my book, he was the one, the implementer of the team, head of the, not head, but it's not the second or third guy on the VIX implementation. So I'm fairly close to what's going on there. Now, what they did was that they backtracked. They backtracked and recreated VIX as if it had traded that day. Okay? I believe on the starting Friday, the 16th, we started trading at, I did a study for this for sure, but afterwards, because of what I developed with the Sigma channels. The Sigma channels on vols. What's more important is that what the vols were doing. Vols went to, I believe, 6 Sigma on Friday. Okay, or was it 5.5 on Friday? So on Monday, definitely they exceeded that by how much we really. It just, you can't measure it, because at 6 Sigma you are at 99, 97% of travel. That we already hit that on Friday, the 16th. So on Monday, everything went berserk, and also because it was trading in such a gaps, you can't really measure VIX properly. Does that make sense?
Correct. Yeah.
Right, Vic? Dennis, you with me on, because it's a 8-way series of puts and calls at the money and one strike over, right? For the puts and calls. When you put that around VIX, it should be one strike. Well, it was trading more than one strike at the jumps. As it moved, it would jump more than one strike. So you couldn't measure it properly.
So do you have any idea what the VIX would have been if it?
Oh yeah, 180, something around 180.
180.
Yeah.
180. Which is
because that's a given to you. That was computed back. That was computed back and given to you
so
by the exchange. And you can download that. By the way, you can download that.
Wow.
Yeah. If you go to SIBO.com, if you do a search, you can find it. If not, let me know. I get it from what do you call it? Russell. Russell will get it to you. Russell Rhodes.
Yeah. Russell's great.
The data is available. You just have to feed it into Excel or import it to your trade station and then overlay Sigma channels over it, and you'll see.
180. So just to put that in perspective, your VIX right here is at 11. So you're talking about 18 times where we're at right now.
Did you see what Mike Thompson? Did you see what Mike Thompson of my team said the other day? He's actually doing a lot of work with Russell. He has run a couple of panels for them, the most recent VIX panels at the SIBO. He said at 7, SIBO will open a GoFundMe page. Are you with me? They're going to open a GoFundMe page, because this is their. No, with all due respect with SIBO, I work for them. I teach for them. That's not the point. But the point is, this is their bread and butter. This is that they put their name on it. This is what they put so much of more recent research on it. At 7, 6 products are dead. What are you going to do at 7?
All right. So how you approach?
We could be there by 2,700 on the S&P.
So how you approaching the market today? A little bit of turmoil. 20, almost a 20-point range. I think that adds up our range from the last 3 sessions here. Fari, just give us a couple pointers here from the open, what you're looking at.
Sure. We're trading, actually, confession time, okay? We are culpa. I'm trading NQ. Here's the reason. Total chaos into the trading. Range are tight. There's a lot of sausage being made. And at least, hey, the damage is wrong. It's a small, if I'm wrong, on NQ. It's $20 instead of 50. And it trends a little bit better. So I can't get 3 handles out of S&P, but I get 4 handles out of NQ. At least it's a trend. It's at least a smaller, consistent move. Where in S&P, you're just going back and forth, back and forth. In terms of market timing, we've been trying to short the market, but a lot of times it doesn't work. So you put it very tight. I'm not doing what I did in May. In May, I made a big mistake. Came back 4%, and I was dethroned. Okay, there was a coup d'état. They got rid of me. Well, because 4% is huge. You can't do that. So 0.5% is my limit. If I'm wrong, I don't think I'm going to get long here, so I'm more apt to get short. The SQ is very high. If you look at SQ of the SPX options, it says the tail risk is high. So the big boys know something. I don't know what that is. As I told Mary Thompson a long time ago at CNBC, I said, I don't make the news. You guys report the news. All I do is tell you the news is coming. I can probably give you a flavor. Is it good news, bad news, lukewarm? But you guys find it and report it. So don't ask me what the news is. I don't know. The data tells me there's news coming. Why? Most intelligent people in the market are in bonds and options. Equity options and bonds. Those are the smartest guys in the room. You can read from them what is about to happen. Do they have public access to public data? I don't know. I know I do because I'm only looking at market data. I'm looking on the feed only. I don't want to hear anybody telling me a rumor. I don't call me. I don't read the zero hedge. None of that crap. I just want public data.
You want the data.
So,
and Rob Hood wants to know if Captain Tico has been downgraded because of his hiding out during the storm, or is he still the captain?
No, he wasn't. Actually, he was up for promotion. He's a KBE, but we were told actually the title is KCBE. That's a Knight Commander of British Empire. But we couldn't get him to Buckingham Palace because he's half Chihuahua, half a Greyhound. So the British consulate in Miami would only give him half visa for his Greyhound half.
Okay. We've been on the line with Fari Hamsi of Hamsi Analytics. Fari, we're getting a lot of requests to get you back on here again. We love your humor. We like your outlooks on the markets and your market timing as well.
Thank you so much. And the feeling is mutual.
All right. We'll talk to you again soon.
Yes, sir.
Thanks,
Bye-bye.
S&P futures mounting a little bit of a comeback here. That was Dennis that brought us off that little dip here, and no spider hedging, Dennis. I don't want to see any red on that.
No hedging, just buy.
No hedge.
You know what? Though I'm gonna say it. The stocks feel like they're down more than the S&P futures. I mean, we've got some stocks that are significantly down here in the pre-market. And, a lot of these are earning stocks as well, but there's some, that just aren't earning stocks. Like, just look at, some of these techs. Like we've got the Qs, and the Qs are down 0.58%, but you got Alibaba down 1.5%. We already talked about Apple being down 1.6%. Other reasons for that. You've got Google trading down 6%. You've got, just looking at the banks are all annihilated this morning. Goldman Sachs down $2.50. Bank of America's down over 1%. Citigroup's down 1%. Morgan Stanley's down almost 1%. I'm just looking across the board. I'm really struggling to find green. There is a few stocks. AT&T and Verizon are green because Verizon's obviously had the decent report. The gold stocks are slightly up here, but I'm not seeing a hell of a lot that's green on my screen besides those couple of stocks. So that's concerning here. I think the S&Ps aren't weak enough for where the stocks are right now.
All right, Netflix here. Do we have any news on Netflix?
Netflix, no real news. It's just a report that I read in USA Today. So Nielsen, who has been struggling for years, we know Netflix doesn't release any viewership data. Nielsen came out with their own estimation of some Netflix viewership data. They said it's pretty good, and then Netflix came out and said your data is horribly inaccurate. But it's something. And I, as someone who watches this stuff closely, it's better than nothing. What Nielsen has managed to come up with. So at least it's something. And they basically said that they profiled 3 Netflix shows: House of Cards, Fuller House, and then The Defenders. They said all of them amount to top 20 shows. If you were to compare them to like your regular cable shows, they're all top 20 TV shows, considering the data, the limited data that we have, which is very good news. Netflix came out though and said your data is wrong, but so
they didn't like the good data.
I don't know,
all
man.
Right. 192.14. That is your pre-market low, and that's a big level for Netflix here. 192.05. That was your October 6th low. Then you got an 8-point gap down to 184.49. I'm not sure what the news was on the 6th, but you should check that out. Just one thing. I mean, always, putting on the, looking at things after the fact. How about that not going up on the good report, Dennis? It got up and a little bit in the pre-market.
It's a tell.
Yeah, that was a nice tell on that one. But a lot of air in this thing under 192.05. We'll see if that pre-market low can hold up.
Yeah, and you're right. They were really down to the 180 area because we came so fast, so quickly there. And I think you've got a few people maybe, playing the breakout through 200 on the wrong side. And I think that's why it was a little bit violent to the downside yesterday. Violent meaning, it did fall when it got up to 200. It fell like $6 there in an hour. And then, consolidated for a bit. I think you could see another follow through here this morning. I think you could see this under 190. Just want me to go through the imbalances here. I'll just quickly give you a few there. That was Fuzzy that was asking for it. Bank of America, 374,000 to sell. Citi, 52,000 to sell. JP Morgan, 63,000 to sell. Pfizer, 64,000 to sell. ExxonMobil, oil's down here today, 90,000 to sell. And Exxon, Chevron, 30,000 to sell. Twitter, 54,000 to sell. General Electric, 131,000 to sell here. It's early yet. These are fairly significant. Square, 63,000 to sell. Alibaba, even with the sell balance, actually, it just went a little bit small. It's only 8,600 now. It was 50,000 just a couple of minutes ago. IBM, which had a hell of a day, I say 60,000 to sell. So pulling back here a little bit. I don't see any buying balances. Like I'm just looking at the board. I can't even, really find any of significant size here. So there's some pressure here this morning. Institutions coming with their selling shoes on. I'm a little concerned here. S&P is down 9 here now. That I think you could see this market actually get weaker.
Okay. All right. 8:59 here. And
you know what? Actually, I think we're going to give Greg a call.
Yep.
I think we're going to give Greg Bruno a call. So Greg Bruno, an investment manager who was on the floor during Black Monday 30 years ago today. We're going to give him a call right now and get some more stories from him on what happened on that day. So we'll be right back.
Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by Benzinga Pro. Joel Elconin here with Spencer Israel, and we are joined on the line by Greg Bruno, investment manager, consultant, certified financial planner, and a survivor of the Black Monday in 1987. Greg, how you doing today?
I'm doing fine. I know you had to look around for a dinosaur to bring on the show today, but I'm still kicking.
All right. So were you GRG or BRN? What was your badge on the floor?
GRG.
How's that for a memory going back? All right. So first, let's get right to it. You were on the floor on that day. And did you have any positions going in, and how did you approach the markets that Monday? And also, just give us where did you get your information from? Were you one of those guys that stood on the side of the pit with the point and figure charts, or how did you get your information back then?
Well, I'll start with the last part first. I was not. I was strictly a field trader inside the pit. I did not use any kind of chart points. My technique was to read the supply and demand at the moment. And I was a floor local, and I was just looking to buy or sell and make a little difference in the trades. So that particular day, coming in on that Monday, no, I did not have any positions on. And throughout that entire week, really with the volatility, most floor traders, most locals did not want to hold an overnight position.
Okay, and then can you remember the open on that day? Did you try and short it right off the bell? Or just try and remember that as best as you can. I know it was a long time ago.
Well, the Monday, the actual crash day, was a very surreal day. As the day unfolded, there was really not a lot of warning for a move of this magnitude. If you go back and you look at some of the pricing changes, it was a very, very big, and the following couple of weeks, we had some turmoil and some bad news. But what happened was the international markets really triggered our opening. So we opened lower, and very, very large sell orders began to hit the market. And when you have a skittish liquidity situation anyway, when large sell orders come in, the market players back away. So you lost the liquidity in the marketplace. And as the day unfolded, we were setting records for declines really in the first couple of hours. I remember as the day continued, and you'd have brokers with sell orders that would be looking around in the pit. Now, you've seen pictures of the S&P pit. It's very crowded and typically active. But brokers would look around and just ask an individual, is there a bid?
Oh,
is there a trade? There were no, it was as if there were multiple markets trading 10, 20 handles in different prices in different areas of the pit. So it was clear that the whole system was breaking down.
All right.
And,
So you made
personally.
Oh, I'm sorry. Go ahead.
I was going to say personally at roughly 2:00 Chicago time, with the Dow down 300 points, I exited the floor. I said, "This is it." I went to the bank. I took cash out, as I indicated to you, $25,000 in cash. I said, "The system is finished. We are. This market is not going to open again." And of course, we dropped another 200 points in the Dow, which was an enormous percentage at the time in the last hour. So it was a very dire situation. It was a day very much like today in Chicago, a beautiful sunny day. And I remember going out on the sidewalk and looking around at people and thinking, you have no idea what just happened. It's a nuclear bomb just went off in the financial markets. And everybody was oblivious. There weren't any smartphones back then.
Okay, so and we could go over this. Actually, the big move and the historical move was on that Wednesday AM. And first of all, you had an out trade, and that's a word people probably never have heard of. And unfortunately, I was on the bad end of an out trade on one occasion. You were on the good side of an out trade, and it was on a 4 lot. So just describe, was it obviously you both buy versus sell, or both thought you bought and you had to make the sell good? Just explain that, and then how you profited handsomely on that 4 lot.
Yes, the following Wednesday, it's invisible on most charts you look at because you would have to be able to see where the futures traded. Most charting services show cash. So on the following Wednesday, we closed around 256 even in the S&P, and it turns out I had an out trade. We were on the same side, making me on a 2 lot, by the way, which made me short 4. So it was about a $10,000 loser or so. as of the prior night's close. So I wasn't too pleased about that. But as we looked at the international markets on Wednesday morning, they were all lower. And there was a situation that developed on that Wednesday morning, which I call the stupidest order of all time.
Oh, yep.
It was a very, very large sell order at market. And that order became known to floor traders. So we ended up our opening range was offered at 200 even, 56 handles lower on a 256 price. So we actually opened down 20% that morning. And this order, which was done by a Shearson broker, I believe it was for 1,200 contracts, made millionaires out of multiple floor traders that were trading near that order. I mean, I can go into the kind of the exact details of that, but in any case, I was short 4 and had a 58 handle winner on a 4 lot at $500 per contract per handle. So what was a decent loser turned out to be.
Did you get a piece of that Shearson order, or did you have to? Because
No.
I know that guy got absolutely. I mean, it was 200 offer on one side of the pit, right, and then like 220 bid on the other side of the pit, and guys were just got Shearson. It wasn't a Henry Kaufman order or something that just sell like 1,200 at the market, and the broker looked around and just started offering it, and the pit was quiet. Then finally offered it at 200, and that guy just got absolutely. I think he ended up maybe getting fined for that. So what did you do? After you missed that, did you just try and give a broker buy 4 at the market? Were you actually in the pit? How did you cover that 4 lot?
No, I was in the pit. So there were other brokers that had sell orders on the same opening that were, just normal sell size. And so I bought 4 from another broker at 200 even, who had 11 to sell. And you're absolutely right. He was 200 offered. And it took a while for the big traders in New York to realize that the mispricing of the futures, and we were trading at a discount of 30 points. A discount of 15% to cash. So the turn was the Goldman broker, who was a female, tried to work her way through the people.
TIA? Anita?
I don't recall. Anita, that's right. I didn't recall her name, but she apparently on the trading desk at Goldman Sachs, they said, buy this, buy these. And my understanding was it was George Soros. It was the Soros operation that placed the sell order. Stupidest order ever. And as she tried to make her way through the crowd of people, remember it was packed with people, you could see that Goldman was trying to get across to buy these contracts. So people reacted to that and bought in front of her. And they'd buy 100 contracts each, and it went from 200 offer to 220 offer. And the net of it all was that Goldman ended up buying the balance of the order at 220 even. And my understanding is that the poor broker who filled this order oversold, and that Shearson actually lost several $1 million on an oversale by that broker on that order. It was an incredible event. But one fellow opened a clearing firm within the next year with the profits that he earned on that single trade.
Can you say, was that LBJ or is that somebody else?
No.
Okay.
No.
All right. No big deal. We don't.
No, those guys did not get a piece of the order. You really had to be in the proximity of where that order was being executed to be able to get any of them. It was a frenzy of all frenzies. No, it wasn't him.
I thought I heard that he was like in London on vacation or a honeymoon or something, and the markets heated up, and he flew back in to be able to trade on those couple days. But definitely a lot of volatility. All right, so let's fast forward here, okay? Because that's past history. Now we're gonna have a pit probably we'll never have an event like that again because it's based a pit in electronic trading. The arbitrageurs will come in a lot earlier, but Today we're having the anniversary. Do you see signs of anything similar on the horizon?
Well, I do. It was slightly different back then because we had a market that was up 35% in the year prior to this event. So it was a fairly volatile move up. But the things that unfolded to create this situation they are in place today. Back then, there was an expectation that there'd be liquidity in the S&P 500 pit so that the portfolio insurance people could come in and sell. They could short futures contracts against their longs at any time. It was the elimination of that liquidity that created this event. The situation today in the volatility trade, in my view, is very similar. It is a gigantic trade. And the vol trade is a paired trade where you're short volatility and you're long equities as a hedge. So this has worked beautifully with this grind up and the grind down in the volatility index. Well, if you're to reverse that for a period of a week or two where volatility spikes and the traders are forced to unwind their position, it's the forced is the key. Not only do they have to buy in the vol, but they will have to sell their S&P holdings, the S&P index holdings that hedge that volatility trade. So in a forced situation, if you get a couple of weeks of extended and spiked volatility and then volatility moves higher again, you could create a situation where there are a very large liquidity driven event with the covering of short vol and a corresponding sale of S&P, either futures or just the index itself. So the element is there in that trade to create a forced sale situation. I don't believe that there's liquidity in the marketplace today that existed back then. The trading desks are smaller. The amounts of, relatively speaking, you're 10 times bigger in the index. And yet your trading desks have been neutered by government rules restricting the amount of capital that they have available to use. So in a very odd way, even though the markets are much bigger and seemingly more liquid, in my view, they're not. They're less liquid than they used to be. So VIX is the area that I see as a potential for a major event that's driven by forced selling. Whether it'll happen or not is, an unknown. But the elements are there.
Let's just talk about the Barron's article over the weekend, and they're saying that could computer generated or exacerbated. You were around long before computer HFT trading here. What's your take on that perspective?
Well, I don't know that that the computer trading in and of itself is the culprit. Remember, back in the 80s, we had a downtick rule in the equity space. Only in the commodity world could you sell on a downtick. It's a very important point today. Today, you can sell any stock, any index on a downtick. So it actually could be a larger and more rapid move because computers can make new lows. They can short a declining market. This is what led to the crash in 1929, and they changed all the rules. So when you talk about electronic, I don't know that it's necessarily because it's computer driven and not people driven, because you can turn those systems off with a flip of a switch. It is more the rules that are surrounding their ability to trade that I think has created a systemic risk. It's just to your benefit if you're short to keep making new downticks. And these algorithms know that. People who write them know that. So they would, they'd pile on in a decline.
So you're an investment manager, consultant, certified financial planner. Are you trying to employ any hedging strategies with your clients? Because you could spend a lot of money on puts and buying VIX calls or whatever and have expire worthless. How are you hedging for yourself and for your clients?
Well, first I have to say that I'm not going to give any investment advice. This is simply opinion. It's important for me to say that for my own regulatory safety. No, I use cash as my hedge. I'm not predicting that a crash event will occur. It's a fat tail, high standard deviation type of situation. But what I think is prudent is a higher cash position than normal in today's marketplace, simply from a valuation standpoint. So I don't try to put in place any kind of hedge to protect against the situation I described, other than a higher cash position than normal.
And so you use that higher cash position to take advantage of these black swan events and redeploy money on the long side, or is that just a long-standing policy to keep a good amount of cash for when you really need it?
No, it is to be redeployed in a black swan event, or even a run-of-the-mill multi-percent decline. So I liken it to you're just maneuvering through rocks in the water. When you see a lot of rocks, you should back off on your speed a little bit and try to work your way around them before you accelerate again. So I believe this is a time when prudence would indicate a higher cash position than normal, in both the equity and the bond markets, in both.
We've been on the line with Greg Bruno. He's an investment manager, consultant, certified financial planner, was on the floor that day 30 years ago in 1987. Greg, great to hear your account of it. We'd love hearing the floor talk and your opinions on the market. We'd like to have you back on again soon.
Well, I appreciate it. Thank you very much.
All right, Joel, before we go, Dennis had mentioned on his way out that someone had tweeted at him asking about Alcoa. So I want to read those numbers real quickly. Alcoa, 72 cents versus 77 cents is a miss, 2.964 versus $2.96 billion. So a mixed earnings report. They are also raising their fiscal year global aluminum demand growth, which is obviously good news. Give us a couple numbers there.
Let's see. I'll try and find just one number, 46.25. That's your pre-market low, and 46.21. That was your low on October 11th. So you want to see that 46.21 hold, maybe give yourself a little bit of room down to 46. So right into yesterday's low too here. Actually, right now we're above yesterday's low, which was 46.51, and good number when you're trying to trade it down a stick on earnings. Your double close 47.75 and 47.77. So there's your wrap for Alcoa.
All right, that is our show for the day. Do you want to say again that today's show is brought to you by Chaikin Analytics, winner of the 2017 Benzinga FinTech Award for Best Trading Idea, Platform, Tool, or App. The centerpiece of Chaikin Analytics is their Chaikin Power Gauge, a stock rating that gives you a directional edge using a proven algorithm that combines fundamental and technical factors. To learn more, go to chaikinanalytics.com. They're also hosting a webinar today at 4:15 Eastern Time, Conquering Earnings Season, the secrets to banking huge profits from earnings surprises. It's with Nick Webb, who's the Executive Vice President of Chaikin Analytics. I've put the link into our chat, or you can go to chaikinanalytics.com/webinars to learn more about that webinar today. Okay, that is our show for the day, folks. Hope you enjoyed our chats with both our guests, and we'll be back with you tomorrow. So have a good day.